Pledging to work together to restore global growth. World leaders approve a plan full of promises, but is there enough action? And is the world's economic map being redrawn? This is Inside Story. Hello, I'm Lauren Taylor. The G20 Summit held in Washington, D.C. on Saturday was an explicit recognition of the increasing influence of developing nations. And with good reason. The only real economic growth in 2009 is expected to come from emerging economies. Leaders of China, India, Brazil and other countries made it clear that they won't be sidelined. But did the meeting come up with any concrete action? Rosalind Jordan has been finding out.
The message coming out of this weekend's G20 Summit in Washington is a united message. The economy is in crisis, not just in the United States, but in countries all around the world.
But the whole point was that we recognize that on the one hand there's been a severe credit crisis, and on the other hand our economies are being hit very hard. And so there was a common understanding that all of us should promote pro-growth economic policy.
The leaders agree 3 things need to be addressed: market regulation, financial support for existing banks, and reform of the World Bank and International Monetary Fund. By March 31st, a task force should have finished an analysis of the global financial situation and possible solutions. By April 30th, the G20 should hold another meeting to discuss that report and to decide what to do next. During the closed-door meeting, Chinese President Hu Jintao also called on the group to protect what he called the fragile economies of developing nations with loans, loan forgiveness, and new trade agreements. China lent Pakistan $500 million this week to address its cash crunch, an easy thing to do for a nation with at least $2 trillion in its bank accounts. After the summit, British and French leaders said tougher global regulations must be passed, even though George Bush has called more regulation a threat to renewed growth.
We are agreed on the need for major reform of the international financial system. And it's necessary to give confidence that we are cleaning up the system based on the principles of transparency and accountability, better regulation integrity and international cooperation.
Mais c'est absolument pas un vague communiqué publié comme ça.
This is absolutely not some vague document with vague ideals. There are deadlines. There are expectations. It is very precise. This is a very complicated problem, and we cannot fix it without some international rules.
Notably absent from the summit's final statement, any detailed plan to help troubled homeowners in the U.S. or struggling workers in the developing world. That wasn't expected. But with economists projecting that a worldwide recession could last about 2 years, one might be justified in asking whether these leaders really feel the urgency of the situation. Rosalind Jordan for Inside Story in Washington, D.C.
Well, joining our discussion are our guests. In Riyadh, Ehsan Boulega, senior economist at Jawatha Consulting. In London, Jan Randolph, an economist and head of sovereign risk at Global Insight. And in Washington, D.C., Kumi Naidu, co-chair of Global Call to Action Against Poverty. If I could come to you, first of all, in London, Jan Randolph, are you surprised that there were not more concrete measures?
Well, I think the significance of this was G20, we've got a global crisis. It requires a global solution, and the emerging markets are part of that solution. I think they've discussed the importance of coordination, whether that's monetary policy or fiscal policy. And that's quite right. Globalization means that individual governments have less power of action whatever they do by themselves. They need to coordinate, and they need to act together. I think they've agreed on the monetary policy side. That's got to loosen further. Fiscal measures can work better if everyone does it at the same time, simultaneously. It has a better impact. That's been agreed. And I think more importantly, they're looking at the future international financial system, the role of the IMF, World Bank, trade issues. It was hugely significant that this is G20 rather than G7. And I think
just if I can bring in Ehsan Boulega, just on that last point about trade issues. I mean, there was a lot of talk there about avoiding protectionism. Can people avoid protectionism in the current climate?
Well, The trade issue, of course, even though it's not directly relevant to the discussion here, but in the Doha round, it will give a very shining example of the rising importance of developing nations. So still the government role and intervening in trade and other issues been talking about, but I don't think it'll be playing a role. But what we've been witnessing in the summit yesterday, that what we heard, yes, one unified statement, but still we are far away from having any real measures as far as resolving the issue. So more or less what we need to do, we need to wait until the early of the second quarter of next year, and then that will take us, as far as implementation is concerned, to the second half of 2009. You see, the thing is that you cannot solve the global fragility of the financial system by only a meeting conversion in a weekend, even though that meeting was very important. But it seems to me that still lots of discussions need to take place within each country, and then maybe regionally and globally, in order to see something of significance.
Okay, Kumi Naidoo, would you agree with that? Is there enough of a sense of urgency, do you think, for bringing in any different measures?
No, I think that there is an absence of the kind of appropriate urgency that we need to see at this time. I think it's important to recognize that developing countries were hurting already as a result of the fuel price crisis and the hike in food prices. And even though this meeting comes after a lot of economic devastation that has been seen in developing countries, I guess I agree with the view that if there's one good thing to come out of it, is hopefully it signals the end of a much more exclusive, undemocratic cartel that is the G8, and broadening and bringing new players in is a step in the right direction. But it's also important to note that, in fact, more than 150 countries are left out of these discussions. We also need to recognize that there's another process that is underway at the United Nations General Assembly, chaired by Joe Stiglitz, the former Nobel Economics Prize winner. And it's really important, therefore, that the G20 not move out of this meeting without an intensive dialogue with those countries that were not around the table, and to ensure that these conversations articulate with the United Nations process, which is a broader one.
Okay, Jan Randolph, if I could bring you back in on the idea of countries trying to spend their way out of recession. Is that something that's sensible, do you think? And how does it work in a kind of a global environment?
Well, I think spending your way out of a recession usually means your debt levels goes up. You're having to borrow from someone, usually other countries which have large savings who are creditors. I think to understand where the global economy is going really understands the real problems that we're faced with. And it's very, very rare to have in the financial sector both the credit markets and the capital markets cutting out simultaneously. It's very rare for that to have that, and it's unusual. And in these unusual, extraordinary times, it is right that governments come in and provide the boost to growth, either through cutting taxes or through raising expenditure. We've also seen direct capitalization of the banking system itself, but they need to come in to step into the breach where the financial sector has presented itself with a huge deflationary shock to the economy through the withdrawal of credit and this very painful and damaging process of deleveraging from the excesses of the past. And it's right and proper that governments come in. On the question, is it right to borrow? Well, some countries are obviously better able to do that. And that's one reason why this invitation to G20 has been made, and hopefully the channels are permanently open for coordination. It is because the emerging markets in Asia and the Middle East, they have the financial resources, both to stimulate growth, but also to make the extra lending to the likes of the IMF and World Bank, who need more lending power to save countries falling victim to the withdrawal of capital flight, whether that's
On that point, Isen Bulega, if I could bring you in from Riyadh, I mean, you're in one of the countries which has the big sovereign wealth funds and so on, and is being looked to for possible assistance. What does a country like Saudi Arabia want out of that? What in exchange?
You see, I can see that lots of focus is being given to the petrodollars invested primarily in T-bills in the United States. And lots of people think that Saudi Arabia and other GCC states should come to the rescue. But the issue is that this financial crisis hit everyone, including the GCC economies and, of course, that of Saudi Arabia. And you can look at the equity market here, and you'll see that it really lost more than 50% since the beginning of this year. So it's also a domestic concern that whatever financial help is extended by the Saudi government and other GCC countries take in consideration also, or need to strike a balance between whatever going on domestically and the effect or the impact of the crisis domestically, and that role expected to be played by the international scene.
Yes,
so
okay.
For Saudi Arabia, the message, it seems to me, is very clear. What Saudi Arabia want to do is as follows: they will focus more and more on their development program. Most of the spending is going to be to go there, and they'll, as they used to do in the past, they will look at what can be done, but that will always be second priority. It cannot be first priority, taking in consideration that still Saudi Arabia is a developing nation and it needs to continue with its local concerns.
Okay, so that's one of the absentees, obviously, from this meeting was the new president-elect, Barack Obama. He stayed away from the G20, but he has expressed concern about the domestic economic crisis in the US. Let's have a listen to what he said.
Today, the leaders of the G20 nations, a group that includes the world's largest economies, are gathering in Washington to seek solutions to the ongoing turmoil in our financial markets. I'm glad President Bush has initiated this process, because our global economic crisis requires a coordinated global response. And yet, as we act in concert with other nations, we must also act immediately here at home to address America's own economic crisis. This week, amid continued volatility in our markets, we learned that unemployment insurance claims rose to their highest levels since September 11th, 2001. We've lost jobs for 10 straight months. Nearly 1.2 million jobs this year, many of them in our struggling auto industry. And millions of our fellow citizens lie awake each night, wondering how they're going to pay their bills, stay in their homes, and save for retirement.
Now, Kumi Naidu, if I could bring you in, I mean, clearly Obama has said part of his reason for not being there is that they can only have one president at a time. But does he also have an excuse, in a way, to stay? Is he effectively using that as an excuse? And did we not hear also in that very much the focus for him will be on the domestic issues? How concerned are you with that?
Well, we are concerned because when his vice presidential nominee, Joseph Biden, was pushed in one of the debates about where they would prioritize spending and where they would cut, given the global financial crisis, one of the things he said was international assistance. So from the Global Call to Action Against Poverty's perspective, we are concerned that commitments made to poor countries in terms of aid and so on, if anything, particularly need to be maintained at a difficult time. However, we are hopeful that President-elect Obama will address the governance deficits of the Bretton Woods institutions, the World Bank, IMF, but go beyond addressing some of the more obvious injustices, if you want, of how these institutions are governed, and look at the more fundamental issues, which is ensuring that we have a currency management system that does not have the volatility that we have, ensuring that there is more equity in global decision-making and bringing in smaller countries and so on. And thirdly, looking at new innovative ways of thinking about global finance in a way that actually has sensitivity to the climate crisis that we have, but also looking at how we can generate new resources of money. So one of the proposals on the table is the Tobin tax, for example, which has been around for a long time, which would tax currencies flowing across borders to put a bit of a speed bump in the road to make sure that there isn't rapid capital flight as we are seeing, but also to set up a global fund that can actually be a source for revenue for international development. And we really expect, on the basis of equity and on the basis of justice, that that's what President Obama will bring to the global environment.
OK, we're going to talk a bit more about the whole Bretton Woods situation in a moment. We're going to take a quick break, and when we come back, it's been called the second Bretton Woods, but is this G20 summit likely to have the same impact? Do stay with us.